Good day, trader, and welcome to the webinar for the week. So today I want to focus on the JSE and to explain what is going on really between the stocks and the JSE index. So what you'll notice is I have zoomed out up till from 2018 up till now, and you'll notice that the JSE has been moving along this box formation, which is not good for a breakout trader, okay? So I'm telling you this because I need to show you the realities of the trading situation. Now, when I get into a stock, I expect it to break out of a certain formation and then move on in the direction of the trend of the breakout. So the JSE is obviously the big driver, that if the JSE is moving sideways, it means that the stocks are moving sideways. So whether you go long or short, the market is going to go up a little and then down a little, and it's very difficult to establish a trend. So take a look carefully at the JSE and you'll see this box formation. I haven't seen anything like this since 2011, and I'm not sure what the JSE is actually waiting for, whether it's world news or whether it's just tired out investors that are feeling a little bit pessimistic with the conditions of getting into stocks for long term, and they're now looking at other diverse allocated instruments such as maybe cryptocurrencies, maybe commodities, maybe even international stocks. So here's the JSE, and you can see that we started off on a good note. It showed some form of an uptrend, and then when the market crashed, it has been moving on this horrible sideways movement. I mean, the JSE has done absolutely nothing. It's actually down for the year, all right? And so I'm waiting for a breakout to the downside where we can get into shorts and make up for any of our small losses, or if it breaks up to the upside, which even if it breaks above here, will show some promising movement that it will continue up. Until then, the JSE is going to remain inside the sideways trend. We cannot predict when it will break out. We can only anticipate. And looking at this, any way is possible at the moment. It keeps testing the support level over here, and it keeps testing the resistance, and it's constricting within a certain level. So the good news, however, is that a sideways trend does not last forever, and that's not how stocks operate. So in terms of the stock market, a 7 months or 8 months is a very short term compared to 50, 60 years. But for a trader, it feels like a lifetime waiting for that movement to break to the upside. Okay, so this is the thing. That's why I said that we must drop our risk level to 1% per trade, so we're not risking a lot. So then you might be asking, so why am I sending out trades when we are in this sideways movement? And the answer is because I only have one criteria for stop trading completely, and that is when the portfolio hits a drawdown of over 20%. Once it goes below 20%, I say, hold on, the JSE is not working with the strategy. I need to reanalyze, look at other alternatives, and then we'll get into it. But we're far away from the 20% drawdown, even though it feels like we've had a bad drawdown. The portfolio isn't looking too horrible. I mean, we're not even down 12% of our portfolio, considering that you take 1% risk per trade and you take 1% of the current portfolio that you have rather than what you had, okay? So if that makes sense, then we can move on. Let's take a look at our dear Anglo Platinum that played games with us. As you can see, it formed this formation, and I told you to get in, and we put our stop loss, and then the thing rocketed back to our take profit. So unfortunately, it hit our stop loss at around 355, and now you should definitely be out of your trade. But as I said, that's the name of the game. With trading, you never know which one's going to win, which one's going to lose. You can only anticipate the trade. Then we've got the banking sector, which is actually looking pretty good at the moment. All right, so we can look at famous brands. Let's look at FirstRand Bank, for example, that has formed this downtrend. Now it's formed this formation over here, which is the cup and handle, And once it breaks above 67.48 or so, we'll get in and ride that uptrend, and we can put our stop loss somewhere around this level. So stay tuned, and we'll see exactly how the trade will play out. Keep your phone close to you. But the banks are looking really good, and when banks are looking good, there is generally a predictive quality that the Aussie will go up as well. Okay, so not making any promises, but things are starting to show that there is going to be a breakout, and it's favoring to the upside, but things can change very quickly in a congestion sideways movement. All right, so that's the next thing that I'm going to be looking at are the banks and the JSE, that sideways movement. Now you know exactly what's going on with trading and the Aussie, and I'm already starting to think of alternatives on what to do exactly to rectify the situation, which is exactly what you should do as a trader, is innovate. Always look at new things with trading. Not specifically change the strategy. That requires a lot of research, and not to change risk management rules, because that is timeless, but to look at different markets, to look at different instruments, and see how they would have worked compared to what you have. So nothing just yet, but I'll keep you in the know, and I hope this all makes sense to you. If you have any questions, remember, go to FSP Investment Research Facebook page, and there is a place where you can ask questions whenever you want. So have a wonderful weekend, and we'll chat soon.